Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I have three charts I'd like to go with you today here at Core Finance this morning. The first one I'd like to look at is the RBOB contract. This is actually the New York RBOB contract, which is the old gasoline contract as a futures contract in New York. And it's actually the one I use because it's the best of the energy complex, I think, at the moment. Now, there's a bit of a messy chart, but the main thing that's happened in all of them today is that there's been a key reversal down, a higher high, a lower low, and below two previous closes. And that's in crude oil, it's in heating oil, it's in gas oil, and it's in the crude contracts. This one, it's come down, and it's really, really important because though we've had other key reversals, one of which failed on the top side, and we have to be a little bit cautious, this one is really an opportunity for it to try down to new lows, which it's already doing, breaking through a key Fibonacci level at 191.07 and going down to test the main uptrend for the whole move from February 2016 to date. And that's running through around about the 186 area, 188.45 area. That is actually going to be a key test for this market. If that fails, then all this ammunition you can see between June and now will pressure the market lower. The recent action could also be seen as a bear flag, and that's just the October action with the long flagpole from the beginning of the month, the hesitation, and the move down. If that happens, we're looking down to the 178 area. To counteract this, you'd need to have a close over, say, 202 or something like that to negate this move. So that's the first one I'd like to look at. The second one I'd like to look at is a coffee contract. It's the London coffee contract. I'm looking at the second month continuous. Not such a busy pattern, but it's actually quite a cool pattern in there. It's called a bump and run, a bullish bump and run reversal pattern. And what it looks like a frying pan or a saucepan, if you like. It's got a long handle, then there's the big sort of like saucepan area at the bottom, and then there's the run, the move up from there. Now, the main part is called the bump, which is where it's coming all the way down and then bumping its way up again. The run up, the initial target for that's already achieved, and that was around 1735 even. The next one, X1, which is marked on there, which is up on the right-hand side, is the high of the start of this move because it's a complete reversal. That's up around about 1845. Now, in the way to that, we have some significant resistance. There is a band of resistance, which is 1720 to 1780. We're coming out of that area at the moment, though it's surprising how quickly it's managed to work its way through there. But the one that's really important is the 50-cent Fibonacci level of the 2016-2017 move at 1810. That's within sort of tiny distances, effectively, of the final target, and it could be something that will keep the market pressured down. The final contract I'd like to look at would be a London contract, and this is the LME 3-month aluminium contract in London. Now, during the period April to date, we've had an uptrend, a very, very, very basic uptrend. It's a busy chart, but you can just see it there moving very, very slightly from, well, basically from July, but really from April, all the way up to where we are now. That's held the market higher. It's been penetrated, it's been breached, but there's been no closes underneath it. Now today is an opportunity, literally today is an opportunity to have that first close and see if it works. Now we're going through a lot of support between 2020 and 2001 in dollars. There's a lot of support and we're right in that area, right in the midst of it. We've had one of the lowest openings in this whole period of time that we've been here. And if that happens, then we could have a significant move because the next potential opportunity might be stops under the 2000 level, which obviously a round number is quite attractive to a lot of people. Could be something where the Andrews pitchfork line, the lower time of 2009 to 2018, Andrews pitchfork, that runs through at 1967. It's not much of a move down, but it's the first potential target area that we could have that. But say, there's a lot of topside ammunition. The whole of April to date, specifically July to date, is sitting on top of the market, and that could push us down. To counteract that, you'd need close over 2177 to negate it. So, thank you very much for listening. Thank you for listening to Core Finance here in London, and good trading.